Hi there, this is Lakshmi, Chartered Accountant. In this session, we are going to discuss about recording the transactions. That means preparation of the journal entries in a company. Nowadays, every company is maintaining computerized accounting environment. Even if they are having a computerized accounting environment, the recording portion is still having a manual intervention. Recording the transactions is the only area where the manual intervention is required. So if you know how to record the transactions, then easily you can get the job of an accountant. As well as if you want to know accounts in depth, you have to understand how to prepare journal entries. How to prepare journal entries is the basic step, as well as it is required if you want to learn accounts in depth. As per AICPA definition, accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money the transactions and events of a business which are in part at least of a financial character and interpreting the results thereof, which means we can record the transactions and events of a business which are in part of a financial character. If it is having a financial character, then only it is recorded in the books of financial accounts. If a company appoints a person, the appointment details will not be recorded in the financial books. If a salary is paid to that particular person, that transaction is recorded, because we can record the transactions in the books of financial accounts only if it is in financial character, as well as the transactions has to be recorded only in terms of money. If a company is having transactions in currencies, which means if a company is having a transactions in dollar, we could not record the transactions in dollar in Indian company, because according to Indian company, money means rupees alone. Money means rupees alone. The Indian company has to record their transactions only in rupees. If any transactions is happened other than rupees, we have to convert that transactions into rupees and we can record it. So as per this definition, we can record only the transactions which are in part of financial character and we can record only in terms of money. As per this definition, the accounting cycle is having 4 stages. The first stage is recording of the transactions, which is done through journal entries or through subsidiary books. In case of a small firms, they prepare journal entries alone. But in case of a large firms, they are having numerous transactions of a same character for which they prepare subsidiary books. The second stage is classifying the transactions, which is done through preparation of ledger. And the third stage is summarizing the transactions and events by means of preparing a trial balance. And the fourth stage is finalizing the transactions and events by means of preparation of the financial statement. For all these, the recording of the transactions is the basic thing. So if you know how to record the transactions, then all other things are very clear. Recording. So recording of business transactions has to be done in a systematic manner. We have to follow certain systems as well as certain rules. So we are here applying the golden rules of accounting. Golden rules of accounting. For the purpose of recording the transactions, accounts are classified into 2. One is personal account and other one is impersonal account. Personal account are further classified into 3. Natural person, artificial person, as well as representative person. Natural person means yourself and myself, and Mr. X or Mr. Y is natural person. Artificial person, ICICI Bank or any other company is artificial person. Representative person means outstanding expenses, prepaid expenses, income accrued, income received in advance, capital account, drawings account are the representative persons. But in any type of person, either it may be a natural person or artificial person or representative person, we have to follow the same rule, that is debit the receiver, credit the giver. And when we come to impersonal accounts, it is further classified into real account and nominal account. All assets and liabilities are coming under real account. Expenses, income, losses and gains comes under nominal account. For real account, we have to apply the rule debit what comes in, credit what goes out. In case of nominal account, we have to follow the rule debit all expenses and losses, credit all incomes and gains. So the golden rules of accounting is applied in three categories. For personal account, debit the receiver, credit the giver. For real account, debit what comes in, credit what goes out. For nominal account, debit all expenses and losses, credit all incomes and gains. This is the basic rule or golden rule which we have to apply for the purpose of recording the transactions. Transactions have to be recorded in a chronological order. Why? Actually, recording the transactions is otherwise termed as journal entries. The word journal is derived from a French word jour, J-O-U-R, which is mean day. So, journal means recording the transactions of a business in a daily basis, which means chronological order. The journal entries have to be recorded in the order of a date. So, we have to specify the date first, and all transactions which is relating to the same date is recorded in a continuous basis. So, we are recording journal entries in a chronological order, which means day-wise order. Every transactions which you are recording has to be supported by a documentary evidence. For an example, sale transactions is supported by a sales invoices. Purchase transactions is supported by a purchase invoices. And for all receipts, cash receipt will be there. All payments, there is a voucher. So all the transactions which we are recording is supported by a documentary evidence. And the recording is usually done through either journal entries or through subsidiary books, depends on the nature of the business as well as the size of the business. And finally, the rules which we are following, we have to apply for making the journal entries. For the purpose of making the journal entries, what we have to do is, we have to follow three steps. The first step is, we have to identify the accounts affected by the transactions. We have to identify the accounts affected by the transactions. Second step is, you have to identify or classify the accounts with respect to either it is a real account or nominal account or a personal account. And finally, you have to apply the rules of debit and credit. Rules of debit and credit. For an example, goods purchased by cash is a transaction. Goods purchased by cash is a transaction. In this, what are the two accounts affected is, one is goods and the other one is cash. One is goods and the other one is cash. Goods is an asset which comes under real account. Cash is also an asset which comes under real account. Here the rule applicable is debit what comes in and credit what goes out. If you purchase a good, goods comes in and cash goes out. Goods comes in and cash goes out. Debit what comes in, credit what goes out. Here you have to debit goods and credit cash. Instead of debiting goods, we are debiting purchase account, because with respect to goods, if it comes in, purchase account has to be debited. If it goes out, sales account has to be credited. So that is the basic rule we have to apply. So for the purpose of recording the transactions, there is three steps. First thing, identify the accounts affected. Second thing, identify the nature of accounts, which means either it is a personal account or nominal account or real account. Then apply the rules to know which account has to be debited and which account has to be credited. We are applying the dual aspect concept here. So for every debit, there is a credit. And the debit amount must be equal to the credit amount. Then only the trial balance gets tallied. So now coming to the key points of the journal entries. If any expenses is paid to a particular person, we could not debit the person, we have to debit the expense account. For an example, if rent is paid to Mr. Pradeep, amount is paid to Pradeep alone, but for the purpose of rent. So we have to debit the rent account. If any amount is paid to any person for expenses, then we have to debit the expense account. So that is the first point. Next, in case if a company is purchasing or selling the goods which in their ordinary course of business they are dealing with, For an example, a furniture showroom is purchasing a furniture. Then it is goods to them because they are dealing with furniture in the ordinary course of the business. So for the furniture showroom, furniture is a good. For a computer shop, the computer is a good. But if you take a chartered accountant office, the purchase of furniture is not a good because they are not ordinarily dealing with that particular furniture. So we have to classify the accounts according to the nature of the business also. So if any company is purchasing or selling the goods which they are dealing in the ordinary course of the business, then we have to consider purchase account if they are purchasing, sales account if they are selling the goods. Next, any expenses which is relating to assets. For an example, wages paid for installation of a machinery. Then we have to debit only the machinery account but not the wages account. If freight is paid for the purchase of a machinery, then freight account must not be debited. We have to debit the machinery account or plant account. So if any expenses is relating to assets, then we have to debit the asset account but not the expenses account. If wages paid for installation of machinery, instead of debiting wages account, we have to debit the machinery account. Next, compound entry. Compound entry means if on a same date a company is paying for rent, for salary, for other expenses, we can have a compound entry for all these three transactions. Rent account debit, salary account debit as well as freight account debit. If you are making a compound entry, then you have to check whether the debit side total and credit side total is matching. Then the company's discount is of two types. One is trade discount and other one is cash discount. Cash discount is given at the time when the payment is made for that particular purchase or receipt is made for that particular sales. So the cash discount is related to either the receipt or the payments. But if you come with trade discount, it is allowed at the time of purchase. For an example, if a person purchased goods for 40,000 rupees less 10% trade discount, then the journal entry for the purchase has to be made only for 36,000 rupees, not for 40,000 rupees, because we have to reduce the trade discount from the purchase value or from the sale value. Trade discount has to be reduced from the purchase value if it is at the time of purchase. If it has to be reduced from the sale value if it is given at the time of sales. Goods accounts. Already we discussed. Goods are nothing but any company dealing with it in the ordinary course of the business. In case of that, we have to debit the purchase account if it is purchased, credit the sales account if it is sold. Then coming to owner's transactions. If any transactions is done by the owner or for the owner, if done by the owner or for the owner, then we have to consider either the capital account or the drawings account. If any amount is contributed by the owner, then the capital account has to be credited. If any amount is withdrawn by the owner, then the drawings account has to be debited. If any payments of the owner is given by the business itself, then we have to debit the drawings account but not the expense account. For an example, the traveling expenses of the proprietor is given by the business, then they could not debit the traveling expense, they have to debit the drawings account. If insurance premium of the proprietor is paid by the business, then we have to debit the drawings account but not the insurance premium account. So any expenses done by the business in behalf of the owner, then we have to debit the drawings account but not the expense account. Then abnormal losses of goods. Abnormal losses of goods means any loss which can be avoided if due care is taken. The abnormal loss amount has to be credited in the trading account and it has to be debited to the profit and loss account. It has to be credited to the trading account and it has to be debited to the profit and loss account. If any insurance claim is available there, then the amount has to be adjusted before it is debited to the profit and loss account. Full amount of abnormal loss has to be credited to the trading account and the amount of abnormal loss after adjusting with the insurance claim has to be debited to the profit and loss account. Then finally, goods utilized for the purpose of other than for sale. Goods utilized for the purpose of other than for sale. If the goods are sold, then obviously the sales account has to be credited. If the goods are utilized for the purpose of other than sale, then the purchase account has to be credited. If goods are taken as charity, then charity account debit to purchase account. If the goods are withdrawn by the proprietor, then drawings account debit to purchase account. If the goods are given as free sample, then advertisement account debit to purchase account. So this is the treatment for goods utilized for the purpose of other than for sale. Then if at the time of a receipt of a amount from a person, if you are allowing any discount. For an example, Mr. X has given 4,900 rupees in full settlement of rupees 5,000. Mr. X has given 4,900 rupees in full settlement of 5,000 rupees by check. The journal entry for this is bank account debit 4,900, discount account debit 100 to the person account 5,000. If the check is dishonored, then we have to reverse the discount allowed. If the payment is reversed, then the discount allowed at the time of receipt is also reversed. So in this case, if the check is dishonored, then what you have to do is debit the person for 5,000 rupees and credit bank by 4,900 and reverse the discount by rupees 100. So in this video, we have discussed about the basics of journal, importance of journal, as well as the points to be considered while preparing the journal. Thank you for watching this video. If you have any doubts, then you can ask in the comment section. Thank you for watching this video.